You can hear me okay, James, now?
Yeah, I can hear you fine.
Okay. Well, welcome, everybody. A little bit of technical difficulties there. Looks like 3 minutes of technical difficulties. Um, July 17th, gold and silver are on the move. Is silver going to break $16 by the end of this show, James? That's the question, I guess, isn't it?
Yeah, I mean, I'm just looking at the day's chart. It's definitely gone up pretty strongly. What's that? 40 cents since the morning, basically.
Yeah.
It'll be tough to see if it can pierce 16. I'm not sure it will, but yeah, whether or not it does. I saw the question on the front of Silver Doctors, and it seemed about 50-50, a little bit leaning toward it won't. But I'd be surprised if it doesn't clear it in the next day or so.
Yeah. Yesterday, as a matter of fact, silver just went into the green for the year. So this is actually pretty exciting, right? Because that's another one of those signals that, I think last week with Mike, we were talking about if traders make decisions based on where price is in relation to the moving average, right? But also, people would make decisions on, well, are we positive on the year or are we negative on the year, right? Because that is important, right? At the end of the year, you want to see a gain, right? If you're an investor. So price is on the move here. It's looking good. But the first thing that I wanted to get into today, James, is what I've been calling mixed signals. Because I think there's a lot of mixed signals right now. And when I'm talking to a lot of analysts, I am hearing some people saying that they're ready for this, major pullback in the metals. I'm hearing some analysts say that, we've broken through and we've broken out and we're going higher. And it can be understandably confusing. So I just wanted to talk about a couple of the fundamental and technical factors right now that are sending these mixed signals and why I think that ultimately the metals are going higher and that it's bullish in the end. Does that sound like a good plan there, James?
Yeah, let's go for it.
Okay. So I'm going to pull up this mixed signals screen that I have right here. And the first thing I want to talk about are the bullish fundamentals, right? And there's a few things going on that are saying gold and silver are bid, right? One of them is the political uncertainty, right? I mean, it's just becoming a circus sideshow in Washington right now between all the name calling, between all the political infighting within the parties, between the parties, So is it any real surprised that other nations around the world are looking at the United States and seeing this circus sideshow we have in Washington and saying, you know what, I think I'm going to reduce a little bit my exposure to dollar holdings and I might buy a little bit of yellow metal here. That's the first thing that I'm thinking about when I'm thinking of the fundamentals. Another thing with the fundamentals I'm thinking about is the Fed interest rate policy, right? Everybody's anticipating the next move is going to be a move down in rates, and they're anticipating it this month, the end of this month. And if that's the case, well, then we know that in real terms, right, and in nominal terms, lower interest rates are bullish for gold and silver. There's economic uncertainty, right? We keep getting these mixed signals with, this 224,000 plus jobs report, right? Oh, it's a booming economy. But then we start seeing, all these other numbers that are showing, Carmageddon and problems in the housing market. And, what do we make sense of that? Is it booming or is it not booming? And then there's market uncertainty. And part of the reason I say that there's market uncertainty is because, once again, we're sitting here with the stock market at all-time record highs, right? So what does that mean? Smart money, smart investors, they're going to be taking some of those dollars from the stock market and they're going to be, starting to put a hedge on here. Right. And part of that hedge is going to be in the safe haven assets of gold and silver, because, how much higher do these markets really have to go? And if they go much higher before the Fed cuts, is that really going to justify a Fed interest rate cut? So there's just so many mixed signals, but I think that in the end, the fundamentals for gold and silver are bullish. And then before I let you jump on that, or did you want to add something to the fundamental picture of gold and silver before I switch to technical?
The fundamentals for the monetary precious metals have been bullish for pretty long time. The question really becomes, how's the price discovery mechanism working out at the moment? And that's ultimately what we're talking about in the short and medium term. Longer term, it's really about the fundamentals.
And that's exactly what I was had prepared here for the technical picture, because it's, what is the pricing mechanism looking like, right? And the very first thing I called is games with open interest, right? So the technicals, these could be pointing to bearish symbols, because if open interest is surging, right, what is that telling us? That's telling us that there could be a lot of naked shorting of just paper gold on the market right now. Also, what's the short position looking like? What's the Bullion Bank short position in gold looking like? If, as the short position grows, that's putting a bullish picture on the metal, because we know that if you're a bullion bank that can print unlimited paper contracts, then you can feed that into the market and just wait it out, because your institutions, your hedge funds, your individual investors, your small specs, they don't have unlimited funds, and they don't have unlimited time to be able to wait it out on their side. So those are bearish in the short term, but looking at silver here, the gold to silver ratio was at 96 a couple days ago, and it plummeted to 90 all of a sudden, and it's dropping even further with silver's move today. So that's bullish, right? So in a sense that silver finally is playing catch up with gold, and then just the general uncertainty in and of itself in these markets, right? Because you've got so many analysts thinking there's a big pullback coming, and you've got so many analysts thinking that the surge is going to continue before the pullback. Well, just that uncertainty in and of itself creates a bullish technical picture, because I think the more back and forth there is going on this wall of worry, the more we're spending time here consolidating at 1400. That's just building that strong technical base for the next breakouts. Thoughts on any of that, James?
Yeah, I mean, this is a short-term rally in silver price. It's yet to be seen what's going to come of it. If it's, whether or not it goes up toward 18 or even 21 potentially. I mean, we all remember back when silver went from roughly 14 spot to 21 in a short time frame. There would look to be a short squeeze going on in the comics. And, the question is, maybe is that's what's going on? We're not sure, but obviously it didn't stay at 21 for too long. So that was for anyone who's a trader in silver, that was a really good time to be, possibly doing a medium short-term trade. But, when I look at all this stuff, it's really a short-term thing. It's not even really about the long term. When I look at the longer term, I'm thinking about some of the points you have up here. And, one of the thoughts that came through my head was, we all know about JP Morgan having a record amount in their COMEX warehouse of a silver hoard. Lord knows who owns it precisely, for whom, et cetera. It's not as if it's just their house silver. It's quite likely that there's other clients in there. But even 153 million ounces, it's just a joke. It's not even that big a deal. I mean, if you think about it in terms of the physical requirements for silver every year, you're talking 800 million ounces of freshly new line silver that needs to get mined every year. And just think about that every year. And if you have a real problem with currencies and people running toward things because they don't trust currencies as much, that's going to be a problem. And the pricing signal on the side, that's usually what creates the price in the COMEX to really drive it, is the marginal buyers or the marginal speculators coming in and pushing the price higher. And that's what it looks like further down the line, like 2020s, even beyond 2020s, you could have a commodity price run up, because currently commodities are about as cheap as they've ever been versus financial assets. Well, imagine the world in the opposite direction. Okay, that's essentially what we're thinking about here. So it's a longer term thing. I don't really care if silver pierces 16. You guys can have fun debating it today and having a guess. It doesn't matter. In the long term, it means nothing. So that's all. I'm taking a little longer term look at this, and commodities is just dirt cheap right now. So you want to get as many of those physical commodities that are precious as you possibly can in a prudent fashion, I suppose.
Mm-hmm. Very good points. And yeah, I think the long-term picture is in fact good, right? So, if you're getting caught up in the tick by tick or in the day by day, because you spent too much on silver and I got to sell it, well, that's not really the proper way to invest anyway, right? There's one more point I wanted to bring up about the mixed signals, though, and let me bring up this first one. And these just show you, though, how I think that there's just mixed signals everywhere right now in both the economy and in politics. And this one blends both of those perfectly. So the first one I'm going to bring up is President Trump the money pumper. Okay, so this is from July 3rd, and this is the second time that he used the exact same phrase, pumping money, right? So this tweet says, right, big currency manipulation, China and Europe are pumping money, right? We should match that, right? So here is one signal, right, talking about you want to turn back on the printing presses, right? So that is, obviously, as far as the fundamental picture would go, that's bullish for gold and silver prices. Now, here comes the mixed signal 8 days later. Okay, so we'll go to the next tweet that's 8 days later. And there it is. Now look at this one, right? So in the USA, right, the real currency in the USA is stronger than ever, both dependable and reliable. It's called the United States dollar, right? So it's like, which is it? Is it that we're just going to print it into oblivion, like on July 3rd, or is it just the strongest ever, it's dependable and it's reliable? Because it can't be both, right? You can't pump money into the system and just print to no end, but be dependable and reliable. So these are mixed signals, right? And they're just coming in from everywhere. They're coming in from politics, coming in from geopolitics, coming in from the markets. And, I hear it in the analysts, right? I cannot recall a time in, probably the last year, we see the flows go on where, everybody's just like moving towards super bearish. And then everybody's moving towards super bullish. But right now, everybody's just been in the, nothing's ever going to happen. But now that something's happened, it's like everybody's just moving to either of these extremes. So we no longer have everybody either overly bullish or overly bearish. We just got this massive mix right down in the middle, sending all these mixed signals. And it has to do with what we're seeing in the real world, in politics, and in the economy. Closing thoughts on the fundamentals and any kind of mixed signals that you're looking at, James?
Yeah, last week I spoke with Vince Lancey. He's a longtime gold, silver commodities trader. He mostly trades in derivatives in the COMEX and NYMEX. What he was mentioning was that there's, in the interview, you can go listen to it. It was last week, Metals and Markets, last Friday. He was mentioning that there's a trade on right now that seems very popular, where a lot of the hedge funds and the people who are trading and coming into gold are going long gold and short silver. And that was a big reason, he said, for big partial reason for why gold had been so strong and silver had been so flat. Usually when gold does pretty well, silver does even better. That was not the case for the last few months. So it's possible, and I think he mentioned that there had been some changes in margin requirements. It's quite possible that there's been some changes where people had to adapt their trade. And so possibly they had to sell some of the shorts that they had for their silver. And that's possibly why we're seeing this strength. Basically take some of these trades off. Because I don't understand, sometimes people want a reaction as to, well, why is it going up today? And it's like, well, you know what? You should go ask the people at the CME group and the people at, over the in London who are actively in the LBMA, who are actively moving the spot price mostly. Those are the ones that really move it. It's not as if when you come to SD Bullion and you buy yourself a case of Silver Eagles, all of a sudden the spot price is popping because your retail purchase of Silver Eagles is now changing the spot price. No, it has very little to do with it. Absolutely, almost nothing to do with it unless we're hedging, unless you're coming in and buying massive amounts of silver. It's not going to be changing much on the spot price. So, the mixed signal thing that you're mentioning, I mean, Trump talks out of both sides of his mouth all the time. It's just basically routing up the base. You can see, 70,000 tweet loves and all that kind of stuff. And he can say almost anything. And some of these people are going to be like, that's awesome. So he's going to talk strong dollar. He's also going to talk, I want a weaker dollar because I want U.S. To be able to build things and manufacture things again and not have all this offshoring. Would have been nice to have had Ross Perot. His point's been made in the early 90s actually kind of stick, but that didn't stick. And so here we are with the situation where we've given away a lot of our industrial capacity to other emerging markets. In the end, you paint a picture. I mean, just paint the fundamentals about the U.S. economy right now and all the things that we owe in terms of debt and unfunded liabilities. It's either default or debase the currency or do a mix of both. That's essentially what we're staring at. So you can talk strong dollar all day you like, but it's not going to last. Strong dollar, I think dollar's lost, 97% of its purchasing power since 1913. Federal Reserve doesn't look like it's going anywhere, and it doesn't look like their policies changed much from debasing the currency in action. So, we can talk, dollar strength versus other fiat currencies. And that's been the case for the last 5 years or so. It's eventually that turns and switches, and emerging markets get stronger typically, and then dollar goes down. And when that happens, precious metals tend to do very well. So,
yeah, and obviously we're at that point too. With 5 years of continued dollar strength, just crushing the emerging markets. So we're closer to all the good news for the gold and silver investors. We're closer to the start of the good news than we are, to continuing the bad news, I think. But James, I got my audio fixed now, so I'm happy about that. So I would like to actually now formally welcome everybody to the live stream. It was weird. I was caught in like some sort of weird kind of like audio boot loop going on through my headphones, and I couldn't get it out until I just force shut Google Chrome. But let's see a couple. Yep, stuck in a loop. There you go. Yeah, I appreciate that. You got any questions coming in for the?
Yeah, I'm looking at it. Not really. I mean, it says, let's see. Some people are asking about it. This Deutsche Bank related. That's anyone's guess at the moment. You don't really know what's really happened until sometimes years after the fact, when it's a major move, and sometimes it's weeks or what have you. But usually the truth is somewhere hidden, and it's very hard to find. And even years later, it's debated.
Yeah, and I was thinking about that this morning because it's almost like, we know about Deutsche Bank, but we've been knowing about Deutsche Bank for years. So it's almost like just, so there's bank runs, so they're laying off people. And it's almost like, it doesn't really matter because the central banks have everybody's back anyway, right? And it's like the opposite of what we're seeing with gold and silver. It's like, they're not breaking out. I mean, they just do this a couple times a year. So, they're not really going higher. So, I find that very interesting that, there seems to be a concerted effort to kind of downplay what's going on with Deutsche Bank, just the same as there is with gold and silver as far as not putting any kind of like positive attention on it. As a matter of fact, I was looking at this article about the Libra, right? The Facebook Libra, and it was on Forbes. I wish I could link that, but it'll take me too long to figure out how to set that up. But I was looking at this article on Forbes about the Libra, right? And usually Forbes is pretty much gold and silver neutral. Steve Forbes, he's a gold investor, right? But this article was talking about, why the Libra isn't good because Steve Mnuchin came out yesterday and was talking, these money launderers and these terrorists are using it as a weapon or to get weapons or whatever was that Mnuchin said. But at the bottom of this article, talking about the Facebook Libra, well, what was there? Like, there were like these 5 articles that they were suggesting you to read. One of them was like, what are the best cryptocurrencies to invest in? The other one was like, can the stock market keep going up forever? The other one was like, which crypto should I go into as a safe haven? So there's like these 5 things, right? And it's like, hello, there's these things called gold and silver, and they actually are things that exist, right? So, I find that kind of interesting that the same way that is kind of hush-hush with Deutsche Bank is the same way that is kind of hush-hush with gold and silver right now. But I'm enjoying it because, these are not summer doldrums this year. We've been talking about it for the last month, and it's still looking that way, Oh,
yeah, I agree. I think precious metals have been looking pretty strong in the last, roughly year or so. They've been turning up and looking more bullish. So it's slow and steady, I think. I don't think this is we're at the cusp of some major blow off, but gold's strength above 1400 has been very, very good. And if you get a situation where it starts nearing 15 and that's like the magic number, if it clears 15, then we're going to be really off to those races. You're talking silver, the same story. 21 is probably that magic number. Mm-hmm. Once you hit past that, you could be off to the races. But that's probably going to require something that the Federal Reserve does that just shows their hand fully, where they're literally going to be devaluing the dollar and letting commodity prices start to run. Mm-hmm. I think ultimately that's what they have to do, while also propping up the stock market and not allowing some type of crazy 2008 financial crash, given the situation with how little that baby boomers have saved in the median, as well, just how much people owe in terms of promises made, whether it's private or public. So they're going to have to prop up a whole lot of things, and at the same time keep the dollar going down in value for the future ability to pay off those debts without fully defaulting and totally debasing our entire name across the world. So, I had an interview yesterday. I spoke with someone, and we were talking about the U.S. dollar and these people thinking like the U.S. dollar is just going to go up in flames. I don't necessarily think that's true. I think that's kind of extreme. It's not going to go like a German hyperinflation, at least in my opinion. Just look back at like the British pound. I mean, the British pound it's still around, but it's just a total shell of its former self. I think when it originally came about, it was 12 ounces of silver for a pound. And now it's like, I don't know, like if you go look at like how much it's worth, it's devalued some odd 99%. And that's the same way we're going with the dollar. It's just a long-term affair. At some point though, the mania phase for this will start to go. And the question is exactly when, obviously. I don't think it's in the next year or two. I think next year or two should be pretty good for precious metals, but it's going to be volatile. Mm-hmm. The longer term, it should get into a place where it gets really crazy.
Yeah, you bring up some good points there with excellent points. Definitely, I would agree with all of what you said. As far as the shell of its former self, the reason why I'm saying that is because for the politicians to avoid the pitchforks and the torches and the guillotines and all that stuff, basically the dollar has to survive, right? So it doesn't have to go all the way to absolute zero. And in addition to that, why would it just be a shell of its former self? Because here's the thing. We're talking about, just like you said, people with savings and retirees. There's a whole bunch of people who are looking to get money from the federal government, right? You got all the veterans and all this stuff with military spending. You've got federal retirees, right? You've got all of these programs through the federal government that are handing out money through these entitlement programs and entitlement spending. So, if the dollar goes up in flames, well, then that's when you're going to get the pitchforks and the torches going down Pennsylvania Avenue. But when I
mean, if you have a gold price record like in 1980, that wasn't the case. I mean, people were concerned about the U.S. dollar, but at the same time, the gold price had basically made it so we could have gone back on a gold standard if we'd chosen to. But it wasn't pitchforks and chaos.
Right. Because well, my point is that because if the dollar is not going up in flames, then everybody's going to get paid, right? That's my point. So if the dollar doesn't completely go poof, then the politicians can still make the claim that they're, making all of these entitlement payments, right? Even though the money isn't worth it.
I get it. Like nominally, you're going to get your handout. You're going to get your bread and soup for the day. It doesn't matter. Even if you have a job, you'll still get something like that, some type of socialist policy where they'll MMT the money out of thin air. Mm-hmm. And that'll help devalue the dollar further. And that'll also keep people, like you're saying, instead of being starving in the streets and that type of stuff, they'll be able to at least get over on some free handout. Mm-hmm. Social Security is the same story. You'll get a check. No promise exactly what it'll buy you, but you'll still get your check. Nominally, they'll pay it out. And if MMT is the excuse they'll use it. I mean, why do you think MMT is getting all this coverage on like Bloomberg and Reuters and places like that? I mean, you don't get coverage like that unless there's some type of agenda typically. I mean, it's just not free PR like that just doesn't come about. There's usually a reasoning for it and a longer term reasoning.
Yeah. Well said. Good points. Let me see here. The pound and the dollar are shells of their former selves. That's from Thomas. Thanks for that comment.
He's right in the sense that they are not worth even close to what they originally were. But the U.S. dollar is everywhere, and 70% of roughly transactions in the world are still U.S. dollar based. So this concept of it going up poof, that means like 70% of everything we use for trading just goes up and poof. That's far-fetched and pretty crazy. So let's just keep it in perspective, I think.
Mm-hmm, mm-hmm. Speaking about keeping things in perspective, before we shift on to our next topic, I don't know how much lag I have, James, but I don't know if you can see that right there.
What's that?
Can you see this? This is a 1900 double eagle, right? $20 gold coin. This thing is awesome. This is from 1900. This is a Liberty Head coin, right? This isn't a St. Gaudens design. I don't even know if I can zoom in on there. But this is an awesome sale they got going on over in your neck of the woods at SD Bullion. $34.99 per ounce over spot, right? That is a heck of a deal for some pre-1933 gold. One of the cool things about the double eagle that I really like is that it confuses the crap out of people because when the Coinage Act of 1792 was written, right, the eagle the eagle was a $10 gold coin, right? And then you had the quarter eagles, which were $5 gold coins, and then the half eagles, and then the quarter eagles, which were $2.50 gold coins, right? So the double eagle came later, and it's a $20 gold coin. But people think that the eagle, right, the $10 gold coin, they think that those are these, right? So they see an eagle, right, a $10 gold coin, anywhere from like, let's say $500 to $800, and like, oh my goodness, there's an eagle. That thing is a great deal, but they don't realize that it's not the double eagle. But that's a heck of a deal right now. It would have been an even hecker of a deal this morning, but hey, $14.25, $34.99 over spot. That's a great price. And we can see right here on the page, you can buy any of them. Right? You don't have to buy 10 of them. You don't have to buy 20 of them. You can buy one of them. And it's a great way to get some gold in hand there. I don't know if you can see that banner that I got going.
Yeah, that's good. That's actually better than the picture in your hand. Let's see the obverse of that coin, if you don't mind.
Yeah. Well, let me show you the Liberty head. Well, this is just a sample, right? So it's a sample.
Sure.
As far as you don't know, like the coin that I have in my hand is not the coin that you're going to have in your hand for anybody who purchases.
Brand new date. Sure.
But, very fine. That's got some detail there, right? That's got some detail.
Sure.
And the date's completely readable. It's not that, unfortunately, there's some designs like the Standing Liberty Quarter. Those dates get worn off so fast because you're talking about the roaring 20s, right? Money velocity was fast back then. Those coins were getting worn down. Plus, the design wasn't all that great. But anyway, so I just wanted to throw that out there. That's a good deal. And because we've been talking about silver a lot lately, but, I'm taking my gold if I ever have to flee my house running through my door. So, it's about priorities at that point. And the priority is get the most bang for your buck in an emergency situation.
Sure. What year is that one, Paul?
This one's 1900, right? It's really nice. It's like, I think 0.96. There it is. I think there it is right there.
Mm-hmm. Yeah, that's back in the days when there was a free silver movement. Pretty interesting time for monetary history in the United States.
Mm-hmm. But the reason why I'm bringing all this up is because last week I didn't have a chance to talk about one of my favorite subjects to talk about, which is inflation, right? Because we're talking about the basement, we're talking about the dollar, we're talking about gold as a hedge against inflation. So I wanted to bring up a couple anecdotal things that I've been seeing, a couple little stories, and I wanted to see if you've been seeing the same things. But the first one comes to do with forced obsolescence, right? And we all know this concept, right? Like nobody right now is using the original iPad, right? They're not using the iPad 2, right? They're not using the original iPod or the iPhone 4, which didn't even have Wi-Fi, right? And then on top of that, Apple's not even allowing those to have the current operating systems because they don't have the capabilities, right? They don't have the memory, they don't have the storage, they don't have the processing power and all that good stuff. But here's the thing. It's not just like computers and smartphones and tablets. I'm seeing forced obsolescence all over the place. And the biggest example of that I saw recently in my own personal life would be with this dishwasher, right? We just bought this dishwasher. And this dishwasher has just been this headache after headache after headache. And part of it was because the installer scratched my floor, scratched my countertops, didn't turn on the hot water, just did a terrible job, right? We bought this microwave to match it. The microwave was dented, had to take it back. I mean, all these problems. I don't even know how Lowe's is making any money right now. But so this dishwasher, right? So we want to buy this $500 dishwasher, right? It's like half the I don't want to pay $500 for anything, let alone a dishwasher, right? Especially when you got one that's working fine, but it doesn't match all the other stuff in your house. So there's this dishwasher. And this $500 dishwasher, okay, sign me up for it. I'm going to buy it. And then the salesman comes back. Oh, I'm sorry, sir. We don't carry that dishwasher anymore. Here's this $700 dishwasher if you would like. The $499 dishwasher you want, they no longer make, so we can't even order it. But you can get this $700 dishwasher. So we got to go with the $700 dishwasher. Here's the thing, though. They're making these things so cheap, right, that you know how like a pickup truck has a latch, right, to open and close the tailgate, right? Or a car door for that matter. They have latches, right? Dishwashers used to have latches, and you used to be able to like pull the latch and open the door of the dishwasher. Now, right, it's just this, you pull it by force, and it's a little plastic clip that's just going to be rubbing on this, metal retaining device. Here's my point. when that part breaks, right? This is like a $1 piece of plastic made in China. When this part breaks, where the heck am I going to get this part, right? I'm not going to get this part anywhere. So what does this mean? This means that Halfdog is going to have to spend probably $1,000 for his next dishwasher, and that's probably going to be 3.5 years down the line, the day it goes out of warranty, right? So, that's one example of inflation that I'm seeing. And these are the types of inflations where they're not represented in, the official numbers.
Yeah, there's nobody who's measuring the quality of the stuff that we make. It's just, what's the price of that dishwasher? Like dishwasher could mean 1,000 things, from the cheapest, most rust-laden old thing to something top of the line that does it perfect in like a grand scale.
Mm-hmm. Yeah. So, it's like there's more examples that we can all point to every day. And this other one is going to sound crappy, and that was a pun, right? But here's my second example. And that's because I was in Walmart the other day, and unfortunately I was going down all the aisles. And I like to watch the people more than I like to shop. But we were going down every aisle, and we get to the toilet paper aisle, okay? Do you know how the toilet paper companies put this is 12 mega size rolls or something like that? There's no doubt. There was this pack of toilet paper. There were 6 rolls of toilet paper in this pack, and it was $10.12. And on the package, it says 6 rolls equals 24 rolls. And I'm looking at this pack of toilet paper, and it was like the size of a notebook. And I'm like, how in the heck are they trying to tell me that this little teeny tiny package is 24 rolls of toilet paper? And it's like, this stuff is all around us. Forced obsolescence was my first example. This is our example of shrinkflation, right? And they're trying to make it sound like you're getting more when obviously you're getting less and less and less, right? Another thing is and it's like people were like, because I'm saying, the United States is becoming the third world. And these are like these examples, right? I used to make fun when I was in Mexico 10 years ago because they would sell laundry detergent in a little Ziploc bag at the grocery store. And I'm like, look, people can't buy a box of laundry detergent. Guess what? At the Dollar General, I'm seeing laundry detergent in the United States about the size of a Ziploc bag because people can only spend $1 on laundry detergent now. They don't have money to buy a $10 box of laundry detergent because they got to buy a $10 bag of toilet paper. You know what I mean? Yeah. So it's like, I'm seeing these signs all over the place of inflation, and we are continuing to have everybody talk about, we're in a deflationary environment. I don't see it.
Well, yeah, I mean, that's the financial propaganda, and then, you can eat that. We've been eating that for, as long as you've been paying attention, you're going to get that. But if you have common sense and you have a real life experience, then you probably listen to what you just talked about and can see that in your own life and agree with it. One of the examples I think we talked about last time before we recorded in an interview, I talked about a lot of times human beings, in their situation when they are forced to, they get very creative and they get very they get resourceful essentially. When I moved down and lived in Argentina for I lived there for almost a year in 2002 or 2003. So it was right after they devalued the Argentine peso and they went through this huge inflation. So I wanted to see it. And plus my US dollars that I saved working at a golf course in the summer, those things went a long way. So it gave me the opportunity to go live there and experience that culture. When I got down there, I made the mistake of, I brought with me like a big boombox CD player because all the electronics down there are typically expensive unless you're getting rip-off fakes. There's a lot of fakes that are sold down there as well. And they don't work as well. The quality is not as high. So I actually dragged one with me on the airplane, literally putting it in the overhead compartment and all that stuff. I get down there and like a knucklehead, I forget the fact that the electric system is totally different. They use the European electric system. So I plugs it in like a moron and I fried the thing in like 20 seconds. And so I was complaining to the lady of the house that I was staying at, and she just told me, just go to the Cubano down the street, right around the corner. I'm like, Cubano, what do you mean? He's like, he's a Cuban guy. He lives over there. He fixes everything. So I take this boombox to the Cubano, and it's like one of those, those steel gate doors that's you just take like a coin or something and cling on it, something like that. This Cubano, he just cruises up and he looks at it, he gives it eyes, and he's all right, I'll take it. And he's like, just come back tomorrow. And so I come back tomorrow, and again, Cubano comes back with it, totally fixed, European ready, new cord, just plug it in, it works every time. And I said, how much, man? And he's like, 3 pesos. So it's like 80 cents roughly. So 80 cents for this guy to fix that thing, and he was happy with the job. And I was happy with the job. The thing worked the whole time I was down there. So all it is just an illustration of situations that people get in. He's from Cuba. Obviously, he's learned all these skills because multi-decades, if you had a radio, you had to figure out a way to make it work. And obviously in the United States, if you were in that situation, are you going to take it to Best Buy and ask Best Buy to fix it? They're going to look at you like you got 6 heads. Even in like major cities, like in Los Angeles, if you have like an electronic frying situation with your vacuum, you got to drive clear across the massive city to find a store that'll actually fix it, and then it'll be like a $200 price tag. So it's a question of I suppose supply and demand. Either throw it in the trash or look for somebody who can actually do it. And there's not that many of those people in the supply chain. But when forced, there becomes a lot more. So, in the end, we were talking in the interview yesterday with someone, and basically we both agreed that in change, even though sometimes when it's really volatile, sometimes it does bring out good things like that. Like, for instance, I don't necessarily agree that we should have forced obsolescence in all the electronics we use. I think it would be nice to be able to buy a computer or a car and have it last for like a decade or two, and be able to go to somebody and just swap out the mainframe very quickly, so you don't have to constantly be buying the next new thing. It's I grew up playing golf, and it's like the golf industry is almost comical how ridiculous they are every year. They have to have like the new craziest thing, and it's just marketing nonsense. You can use the same driver for about 4 or 5 years before the technology is probably outdone. So it's similar stuff. It's like we're on this like, situation in the United States where next quarter we got to have a profit. We got to turn out as much profit as we can. A lot of these businesses, they're putting themselves in huge amounts of debt in order to buy back their shares and look like they're doing really well. But they're not looking at this in like a long-term time frame. Like the managers of these companies, they want to cash out and get as much cash as they can. Everybody's thinking for themselves. They're not thinking about these companies in like a 10, 20, 30 year time frame at all. It's mostly only the private companies that do that kind of stuff. So anyway, the whole point of it is in change, sometimes there are good things that come about. And I would expect this throwaway society, this shrinkflation society, more toward the end of our lifetimes, it'll probably change a bit. I don't think it'll be the same way. I think it's kind of an illustration of the situation that we're in demographically and financially, mostly.
Mm-hmm. Yeah, I think you make some good points there. It's very good points. Also about like the pirated stuff, and people don't really understand that maybe in the United States as much as outside of the United States. But, when you're making a foreign currency, when you're in an emerging market, right, and you're not making all that money, right, when it comes down to it, if the choice is I can go buy a legitimate, And right, like stuff is more expensive. Like durable goods are more expensive, right? So a pair of Levi's jeans in the United States probably be like $50, whereas in an emerging market it'd be $100, right? So if you're making emerging market salary, you can't, go in and buy that authentic Levi's jeans, right? You got to buy, the Levi's jeans that's misspelled and doesn't have the apostrophe, and that's going to cost you $10 as opposed to $100, right? So and yes, and then you get into the problems with the quality's not there, so much so that, this was a problem in the Army, right? Because, Oakley's, right? Ballistic sunglasses. But if you're buying some knockoff Oakley's, you don't want to trust your eyesight with those things, right? So, these are part of the problems with when your dollar doesn't go as far, you're forced to cut corners on your purchasing, and that can have some pretty interesting consequences. And then, like you said, the fixing everything, that's a very good point.
Companies too got to figure out, well, how are we going to sell to the glut of the massive population that can barely afford this? I know how. We're going to cheapen the thing and make it smaller, or lie on the product's exterior and say, yeah, this is 24 rolls, even though you count 6, buddy. Just rationalize buying this for $11.
Exactly. Like the thing I noticed about the dishwasher, right, is because we've got this Jeep Liberty, right, and Jeep Liberties, and I think other models too, but they're notorious where they have this, like, the whole window system, right, is resting on a plastic latch, right? So the weight of the window is sitting on a plastic latch. So even if you never use your windows, right, roll them up and down with the power windows, over the years, that plastic is going to get brittle, right? Especially in the Texas sun, right? That plastic's going to get brittle. And then even if you never use your windows, one day you'll be driving, all of a sudden it'll be like, bam, and it's going to sound like a gun was fired in your car, and that window's going to drop, right? And this has happened, right? And this has happened to both of our windows.
A lot of times too, right? I mean, I think that's what happens.
Yeah, and then you go to buy it, right? And then you can't buy just that little plastic latch to hold the window in place anymore. You got to buy the whole elevator assembly, right? And then that's like $200 and some, and you got to pay someone to install it, and so yeah, it just goes on and on and on with these cuts in quality, right? And who owns Jeep? Not GM, Chrysler, right? Chrysler. So Chrysler finally acknowledged it after so many years, right? So they started giving these, what do they call it? The recalls, right? But it was like, for vehicles that were made in September, and our vehicle was made in March. So we missed like the cutoff by like 6 months. But that's like always my luck, right? So we've replaced these windows twice, and one of them, and they're both broken again, right? So now they're just ghetto rigged, where I've got some stuff holding them up, and then we just don't even use them anymore. Because what are you going to do? It's a bad design. They cut corners to make it, and it's just forced obsolescence.
Yeah, we talked about this once, I think, before in our past, where cars nowadays, it's not like back in the day where you could just work on it in your garage, or Dad taught you how to fix your engine. Those are old. Nowadays you got to go into the actual dealership and have them plug it up to a computer so the dealership can make a profit off fixing your car and turn you into a cash cow versus you being able to do it yourself. So this is all part of the model of like, we got to squeeze every dime we can out of everybody. And, it's a problem because it forces blowback. Like, for instance, you yourself, you're never going to buy a Jeep again. And anyone who's ever done any research on Jeeps, those things have garbage track records. Toyota, the Japanese, those are like the best value if you're getting a 4x4. But Jeeps, I guess maybe a Wrangler if you know what you're doing with engines. But most Jeep SUVs, they just have bad track records. And a lot of the points you made are probably why. The engines are sloppy too. I don't think they work that great. They don't last that long.
It's unfortunate, but like you said, it's just trying to get that last bit out of everybody, and it's everything and everywhere, right? When it comes to food, it's not or farm.
It's just, we're talking about a holistic thing about the way that society is.
Yeah, like with food or with pharmaceuticals, right? Putting the expiration date on it. It's not because it expires; it's because they want you to buy more of it. I
know my wife sometimes she'll look at something and she'll be like, expired, just toss it in the trash. She'll be like, what are you doing?
Yes. Yeah. Yes, I ran a soup kitchen, right? I used to work in conjunction with the USDA, and they would give me the guidelines and say, it's not really expired. You can use this stuff for up to 3 years after the expiration date. It's like, what? It's like, well, they didn't tell me that. They said I had to buy a new one. So let's just address a couple of the questions in chat and then wrap it up with some closing thoughts. I wanted to just talk about for our final topic of discussion. It's going to be about gold standard, and the Fed picks. But anyway, I just wanted to address a couple of the questions in chat before we did that. I saw one of them fly by that said, what software are you using for the charts? That's Thinkorswim, right? It's a trading platform. It's a desktop application. I know I use it on Windows. I'm sure they got it for Mac and for Linux as well. But it's a really robust platform. Someone was just wanting to know that. That's no recommendation or sponsorship, obviously. Any other questions you see there in the chat there, James?
A little bit on, someone was asking, Steve Miller asked multiple times, and I'm sure people are thinking if they've read that article, but Alistair McLeod published something about China being the huge whale buying silver now via JP Morgan. That, if you read the article and then the rebuttal from Ted Butler, it just looks like two guys with theories about who's what. It just looks like a lot of argument, really. And the truth, like I said, typically in this kind of stuff, it takes years to kind of figure it out. Like, for instance, when Bear Stearns went under and JP Morgan took over that account, it took years for people to figure out that JP Morgan was getting its head handed to it after we got to $9 silver and ran up to 50. There was a situation where, they made money probably shorting it down to 9, but that run up from 9 to 50, you can bet they never forgot. And that's why they probably acquired a decent position. In case something like that ever occurs again, they're not going to be caught, completely naked, right, without any silver on hand. So,
good points. And I take I'm going to take a more sinister view of that, because I think that I know I'm more on the far manipulated side than most people. But my point about that would be, because we're not going to know, right? We're not going to know the finer details. And one of the things that I brought up today in my article was that, because right now there's a lot of back and forth about, have the market riggers lost control of the markets, or the gold and silver markets, or have they not lost control? And here's the thing, right? I can't remember what movie this was, but I only watched like 5 minutes, the first 5 minutes, but that's all I need to watch. But there was this movie, right? I don't remember what it was. It was like medieval movie, and it was like showing, the opening scene was like a battle, right? And like the king gets slain in the battle, right? And like the knights are like trying to hide this, and they like rush him off the battlefield, right? But some guys that are on the other side, that are fighting on the other side, they see that the king is dead, right? And the knights know that the king is dead, and they rush him off the battlefield so nobody sees it. So here's my point, right? It's like, and this is just a question, right? But if the cartel has lost control of the gold and silver markets, then maybe they know that first, and just the rest of the world doesn't know it yet because they've rushed the king off the battlefield. So that was just some food for thought to throw out there.
So don't get it twisted, Paul, for sure. They've made a lot of money in the last many decades, where they've been allowed to go in and spoof the market and do what they want, and have their elite traders and derivatives make huge bonuses. I mean, they've been more or less allowed to do that. And the government's like, yeah, thanks. Keep bringing down commodity prices. It makes our dollars and our system look good. But at some point, they're going to have to let that reverse. You can't just pin commodity prices down forever. At some point, that starts making real problems in the real world, because people stop producing them because they're not getting paid enough in return. So at some point, you're going to have that reversal, and it goes part and parcel with all these countries wanting to devalue the debts that they've acquired. So it's just, in the end, the point is that those that are on the short side, who have been on the short side, at some point they're going to start switching toward the long side, so they can make their little bonuses here or there, or get some profit out of it. It's a combination. It's this interesting combination with gold and silver. You can have it go well because of fear. I'm talking about fear of loss, and you can have gold and silver do well because of greed. It is one of the only assets that has both of them kind of intertwined, especially gold. It has both those really intertwined. So it's just a point of, you for sure, you're definitely going to have traders who are going to be going long. The one thing I'm more interested about is what happens when some of the sneaky billionaire class start going in and buying it. Are they going to be doing it via miners? Probably, most likely, they're going to be going through miners. But there's also probably going to be a good lot of them probably doing it on the physical side too.
Yeah. Good points, James. Good points. Okay, last topic, just a couple minutes here. Thoughts? Because Judy Shelton's back in the news, and now some of the names are coming out, like Jim Rickards, for example. He was talking about Judy Shelton, and I think it was in a tweet that he did. I should have pulled up that tweet and got it ready, but he was talking about, how. Or was it him or was it somebody else? Anyway, talking about how it looks like she has the votes that she needs or something like that, where that, because Trump still hasn't formally nominated her. All he's done is treated it out through @RealDonaldTrump, right? Still not on formal nomination. But, people are saying, oh, well, she's got the votes that she needs to get confirmed to the Fed. So, I don't think that I've been in a position where I don't think it's going to happen, because I don't think that they would risk that with having gold brought into the conversation so much. But then again, now it's like with these people talking, she's got these votes. It's like, well, is this going to happen or is this not going to happen? What are your thoughts with all these President Trump picks where they're seemingly gold bugs that are getting nominated to the Fed? What are your thoughts with that, James?
I'm not really sure how much it's going to make a difference whether or not Judy Shelton is there. I mean, it's nice that she talks positively about gold, but so did Alan Greenspan before he became involved with the Federal Reserve, and so he does after his being out of the Federal Reserve. I care more about actions. I don't care what you say, really. And when you're in a position like that, I just watch your actions, because words don't mean much. The words are kind of like that mixed discussion we had earlier. You could send out 2 tweets that mean totally different things, and everyone's going to be like, "Hey, thumbs up, awesome," without any thought. It's just there's like no depth to some of the thinking going on here. It's like I don't know. To me, it's strange, but it's also just part and parcel with the way that our society is right now. It's just it's a little bit crazy. And to be honest, I just think it's going to get crazier as we move along, not just socially, culturally, politically, financially. All these things are going to get even wilder. What you think you've seen has already been nutty. It'll get nuttier, my hunch, before we really start moving into the next phase of wherever this financial system and just in general our global economy is going to go.
Mm-hmm, mm-hmm. Good points there. I got my Silver Doctor shirt on, James. Links in the description below. Mike knows how to say that much better than I do, because I am not the host. I am the co-host. So today I'm being the host, and I thank you for being my co-host today, James.
Yeah, it was thankful.
But yeah, so because, the point is, we're not a big network, but we're going to be there on Wednesdays at noon, right? Because we want people to get good, reliable information. And, we want to be like President Trump's dollar. We want to be dependable, and we want to be reliable. So we're going to keep firing off at noon on Wednesdays. I'd like to thank everybody for joining us today, for participating. I'm looking at a price of $15.95. We never got above $16, right, in this hour that we've been chatting, going on for an hour now. But, that's the question that I posed on the front page of Silver Doctors. I think we get there by the end of the week. That's what I've thought. But then again, price and time and the same forecast is not the way to go, because you can get one of them, but you can't get both of them. So I'll probably be wrong on that, because I'm usually wrong on everything. But, James, final thoughts there?
Just thanks for everyone tuning in and coming by. And, if we didn't answer your questions, come by next time, and we'll definitely try to do our best to get, at least give you our honest feedback of where your questions are. I did see somebody talking about is silver ever going to return to the monetary system? And, how many billion people do we have, Paul, in the world? Like 6 some odd billion people.
I think pushing 8.
Okay. So maybe we have 8 billion. Let's say we have 8 billion people. In the world, there's maybe 4 billion ounces of investment grade silver above ground. That's a half an ounce per person. My hunch is we're not going back to any silver in our physical money anytime soon. Maybe back when we had a population of, a billion, we could pull that off, but not now, I don't believe. So,
I take a different view, right? I'd say that we have to. It's not a choice, because the Constitution says so. But here's my point about that. When I was talking with Keith Newmeyer the other day, he was saying that when he started First Majestic Silver, the natural ratio of gold to silver was 12 ounces of silver out of the ground for every ounce of gold. He said right now they're at 9, and they mine gold too, right? They don't just mine silver, they also mine gold. He says right now they're pulling out 9 ounces of silver for every ounce of gold. And he said the number's dropping. So when people say, gold-backed money, or can silver come back? See, I think that one of the reasons that I think that gold and silver can get to parity is because if it's a bimetallic gold and silver standard, and if they're paired and valued the same, and if it's a question of price, then there could be enough. That's just some hope out there that I, would put my faith in humans that we can figure out in the long run. In the short run, we'll see, right?
Yeah, look, it's a mix of both positive and negative. Silver is always going to be money in the free market. And when I say the free market, I mean people to people who know what it's worth. So they can go into this realm where they want to go cashless, and they want to be able to track all your money and all that kind of stuff. That's not going to stop people from using bullion, whether it's silver or gold. The stuff is smuggled all the time into India and to other countries like Japan. They'll claim that anyone who uses gold and silver is going to be like a lawless criminal and all this kind of stuff. But then the people who are using gold and silver are going to turn and point at the government and say, you guys are lawless criminals, and we're sick of you trying to track and trace everything we do. We're not terrorists. We're not here doing any money laundering or anything like that. We just simply want to be able to use hard money in transactions with other private folks. So get out of our business. And so that fight will continue. And the question is, will we ever get a government that justly allows people to have sound money that circulates in the physical realm of the world? I'm not really sure that's true, but we'll definitely never stop using it human to human, people who know what the hell it's worth.
Excellent point, because, even if we don't go back to gold and even if we don't go back to silver, officially, formally, humans still will, as they always have done, and will continue to do, as you're saying. So,
yeah.
All right. Well, thank you, everybody, for tuning in. Do us a favor and smash that thumbs up button if you want to help out in the fight for sound money. If you also want to help out in the fight for sound money, I would recommend purchasing a Silver Doctors t-shirt. Let's talk real money. We've got these, James, you've got these 34